I would like to address one thing really as quick as I can
Sure.
possibly make it about like sponsorship. Because somebody
Hmm.
asked a great question about Fidelity Contra, and I don't know if they were saying, well, their performance is not poor, but they basically just asked, well, what's the performance like for Fidelity Contra? And honestly, I don't know. I assume they're doing okay, they're doing fine. I don't own the fund personally, although I should, another, if I could go back in time, I'd constantly just put a little bit of shekels in there every year. You have a good year, move some of the money out of your trading account into an investment account in Fidelity Contra. Anyways, these are the things that I lament in my trading career. But Contra's so big, it's going to be really hard for them to do well, to beat the market. If they beat the market by 100 basis points or something, they're knocking the ball out of the park. So I'm not really worried about their performance, but if they, I say they, I mean, Will Danoff is the manager. I'm sure he's got a team of people. If they identify a name that they want to buy, I like a remora on a shark, I can tag along on that thing and just go with it. And maybe, C is the smallest position for them, but I can have a bigger position. And if they just build it into a normal size position, maybe a 1-2% position, they'll have to buy millions and millions and millions of shares. So somebody is doing that. Somebody out there is just constantly like what we would say on the bid. So they're a buyer. You're on the bid, you're a buyer, and they don't like to chase it up, is my understanding of how they do it. But they'll just sit on the bid, and so they'll just be a buyer and a buyer and a buyer, and maybe they get anxious and decide, we're not getting what we wanted at 85, 86. We're a buyer all the way to 90 or something like that, and that will allow the stock to have a little burst and so on and so forth. So that's why we use sponsorship, is because we can see how they're building positions, and maybe they can take them to larger ones. And most of the mutual funds, it's a difficult game for them to beat the market because of the rules they have, and the portfolio sizing, position rules, etc.
Well, our very own Hat Man is telling us that Contra Fund is doing great, that it's up 31% year to date. So I believe that is outperforming the
Oh
broad.
yeah, but that's probably more than the Nasdaq, right? I think the S&P crossed above the Nasdaq recently as far as performance. Honestly, I mean, I track it month by month in my own accounts just as a comparison. But I
Yeah.
can't remember
Let's see.
where the index. I think the indexes are up
Yeah.
teenage years, right?
Yeah,
Something like
Scott,
Yeah.
that.
Scott, you're
Less than
right.
20% or
Yeah,
less.
19.8 for both, in fact.
Yeah.
19
Oh,
or
okay. Yeah.
9.26, yeah.
Yeah.
So not
The
bad. And it's so it's there's other funds that we follow, and they might have like these, the sponsorship rating might be, what's the sponsorship rating for FCNXT? It's probably low, but that doesn't really matter for us. It's the type of investors they are.
But I just wanted to echo something that, Scott was saying, that people don't really realize what a big deal sponsorship was to Bill. Like, he would, when I would give him a stock, the very first thing he would do is
Mhm.
we typically you pull up the monthly chart and look at that. And then the next thing would be the sponsorship. And in the product that we used, we put the sponsorship in a little different way than we do with Market Surge. And hopefully that's something that we could improve on and make it there's room for improvement there. And the key is just finding a few funds that you want to follow. And everything that Scott said was exactly right, and we should like flip that and put that out, because if a fund just wants to make it from their small position to a medium position, that's a lot of buying. And even if their performance isn't that good, these people don't have high turnover. Just by definition, mutual funds, they like to have low turnover. And so they're just in there buying, and it takes a lot for them to really reduce. So they'll just, if the stock is going through trouble, they'll just kind of not increase it and slowly decrease their position. But what you can do is just take one fund, take your favorite fund like Contra, and then really dissect what they're doing. Look at their new positions, look at what they've been adding to, and just look at it from that lens. I mean, if you start looking at it from what they're selling, then that's a whole different can of worms. But just look at their biggest positions that they're increasing. But also, when you've got a fund like this that, you know, isn't a closet indexer, but because of its size, kind of has to do a little bit of that just because of the stocks that they can own. Look and see the positions that they have versus their S&P weighting. So if it's a 2% S&P weight and they've got a 0.25% position in it, they're really underweight that. Like they're saying they don't like that. But if it's a 2% weighting in SPY, they've got a 4%, really pay attention, because they're making a statement with that. If it's not even in the S&P and they've got it, that's a big deal, because they're going outside of their benchmark. That's where they're trying to get alpha. So the institutional sponsorship, it's its own art and science in itself, and it's super, super important.